Here, no? Good morning, one and all, and welcome to RT classes CA and CMA Guru. Today, our discussion part is regarding reconciliation statements because this is the easiest chapter both in CA Inter level as well as CMA Inter level point of view. And if you check with the previous exams, whether it is CA Inter or CMA Inter, especially for CMA Inter people, damn sure every time they are touching reconciliation statement for 7 marks point of view. You are able to score 7 marks very easily when it comes to reconciliation statements. When it comes to CA Inter, sir, so cost accounting system, you may be call it as CMA Inter, you may be call it as cost of bookkeeping itself. CA Inter, whether it is ledger accounts related or reconciliation statement, any one of the concerned things they are concentrating in examination point of view. So easy question, and in case if any student ask me, sir, if we see reconciliation statement in the examination, my sincere advice, after you are approaching your MCQs, straight away you can go through with this particular question, because full out of full marks you can get it. So whenever you are handling in your CA foundation bank reconciliation statement, I think so many people will enjoy that particular topic, because easy to understand and compulsory question even in CA foundation as well as under 10 marks point of view. Same way, whenever we are handling with the reconciliation here also, but here the reconciliation is not about cash versus passbook. Here it is about financial accounting versus cost accounting. That means financial books versus costing books point of view we are discussing. And my sincere advice, so please watch this particular video until end of the concerned concept, and please subscribe our channel as well as like once you done with the entire video seeing. So many people are seeing, they are not liking the concerned video. If you like this particular video, it may be reached to so many people who want this concept. That is my intention, nothing else. Okay, let's enter into the concept itself, sir. The concept itself is reconciliation of cost and financial accounts itself. Sir, why this particular concept will generate only under non-integrated accounting system? Only under non-integrated accounting system. Sir, what is the difference between integrated accounting system and non-integrated accounting system? Means integrated accounting system, only one set of books of accounts are available. So there is only one profit. So there is no concept of reconciliation under integrated accounting system point of view. But when it comes to non-integrated accounting system, like you have to maintain separate ledger account for cost accounting under costing books. You need to maintain a separate ledger for financial accounting to show financial account point of view profit. That's the reason you are getting one amount of profit under costing books. You will get one amount of profit under financial books. Both the profits, actually your costing books profit is equal to financial books profit, but both are not equal. What are the reasons and everything we will discuss in detail itself. Sir, my sincere advice to the concerned people who are handling with the concerned problematic subject, you are not going through with the theory, sir. That is the reason you are failed to understand the problems. Because based on my past experience, I have vast experience in this particular field. I almost taught for more than 100 batches regarding cost accounting point of view. Majorly I will hear from students, sir, we are not able to understand the question. Sir, if you explain the question, we feeling so happy, are such an easy question, we can approach this problem very comfortably and easily. But the issue here is the students failed to understand the question. That's the reason for why they failed to understand the question, means lack of theoretical knowledge about the content. Whenever if you go through with theory perfectly, damn sure, sir, trust my word, so you can enjoy the problematic part also. That's the reason focus while we are concentrating on theory. Even I observed, and even so many students told me, sir, we fast forward the theory and we just listen the problematic part. Don't do that, sir. Listen entire video, especially don't skip theory. concentrate theory, you will understand the problematic very comfortably. Okay, let's come back. So now we are talking about non-integrated system, and already I told you integrated means only one set of books of account. That means financial books and costing books combiningly we will maintain only one set of books of account. But when it comes to non-integrated point of view, so you will maintain separate books of accounts, financial point of view separately, you will maintain a costing point of view separately itself. Got it, ma? So whenever you are maintaining these books of accounts separately, you are supposed to reconcile both the books of accounts, whether the particular information, especially cost accounts, are showing a reliable information or not, you are supposed to check. For that reason, you need to reconcile two set of books of accounts. Sufficient details are available. We are in a position to locate where the differences are happened. Because of these differences only, we are getting difference in profits or not. For that reason, we introduced reconciliation statement itself. One more time, sir. Because of certain reasons are there, you are getting differences between financial books and costing books point of view differences regarding profit wise. Really, these are the only reason you are getting differences, or some other reasons. To find out the certain things, we introduce the concept of reconciliation statement itself. So the reconciliation of balances of two set of accounts is possible by preparing a memorandum reconciliation account. Sir, what is this account means? So some items charged in one set of accounts but not in other. Same way, certain items will transfer to only costing books, may not be transferred to financial books. So to finding the concerned things, these items of differences either added or subtracted from the profit as shown by one set of books of accounts. Sir, can I take financial books profit or I can take costing books profit? Your choice, sir. Unless otherwise if they ask you only one profit is given, then automatically you need to start with that particular profit figure only. If they given both, sir, when they will give both, especially if you prepare complete problem under reconciliation statement point. Sir, complete problem means you need to find out profit under financial books, you need to find out profit under costing books. Then take costing profit. My sincere advice, take costing profit as the base. It is easy to do reconciliation when compared to financial point of view. Sir, I am not saying that you are not supposed to take financial books profit is the starting point for your reconciliation point. You can go with that, but my advice is go with costing profit is the starting point itself. Yes, sir. So it is important, however, know the causes which are generally give rise to the differences in costing and financial accounts. They are briefly explained here. See, certain items included only in financial accounts but not in cost accounts. Yeah. Same way, certain things recorded only in costing books but not in financial books. And some other reasons. What are the reasons? Methods of depreciation, valuation of inventory. These are all parts. These are all four reasons why reconciliations are coming into the picture. First one, items included in financial accounts but not in cost accounts. Same way, certain items included only in cost accounts. And you have different methods of valuation under depreciation. Even different basis for valuation of inventory. Even one more point, while we are solving the problems, I will tell you what is that point also. Yama, let's focus. First, items included in the financial account but not in the cost account. Sir, what is that example? Purely financial expenses. Purely financial expenses. These expenses only included in financial books but not under costing books point of view. What are the examples? Interest on loan. Yeah, that is only item. Or bank mortgages only included under finance point of view but not under costing point of view. Second, sir, expenses and discounts. Expenses and discounts regarding what? Issue of shares and debentures, etc. So you will incur at the time of issue of shares and debentures, you will incur certain expenses, sir. So those expenses only will recorded under financial but not under costing point of view. Next, capital losses. That is, any of the concerned things are destroyed by fire, and if they are not covered by the insurance companies, that kind of any capital losses should be covered under financial books only but not under costing books. Next, loss on sale of assets. Not only assets, even investments also. If you check with the any profit or losses generated from the sale of fixed assets only should be recorded in financial accounting only but not under cost accounting point of view. And next, income tax, donations, preliminary expenses write-off, goodwill write-off. Yeah, these are all kind of things should be covered under. These kind of expenses are purely which nature ma? Financial nature. That's the reason where only we are recording financial book. See sir, expenses only recorded under financial books but not recorded under the costing books. That leads to what will happen? Automatically costing profit is more than the financial profit. So then what we will do? Automatically costing profit is equal to financial profit, means you are supposed to reduce the costing profit. If you want to reduce the costing profit, what you need to do? Deduct it in case if you are starting with the profit from costing books point of view. Then you will arrive at what is the profit under financial books itself. These are all in related to expenses. Same way, certain purely financial nature of incomes also there, Nana. Purely financial incomes. Yeah, what is that? Interest received. Yeah. Dividend received. Same profit on sale of assets and investments. Losses purely, and same way profits purely belonging to finance, where it not belongs to costing point of view. Next, transfer fee, anything if you received. Yeah, and rent receivables, these kind of incomes. Only where they are recording, sir? Finance. Where not recording? Costing point of view. So these nature of items, in case if you don't record in costing books, what will happen? Your costing profit is showing less than your financial profit. So this is the first reason why you are getting differences between financial books and costing books point of view. So once if you find out the difference, what you will do? Either add or subtract. Yeah. So this is the first point. Then items only included in the cost accounting point of view, like notional things. Notional things never be recorded in the financial accounting point of view. Like example, payment of rent for our own premises. Yeah. So actually, sir, here what basis you are recording? Opportunity cost basis. Sir, this premises I am using for my business. In case if I don't use, I maybe give let out to someone, then I will get some rental income. I am losing that rental income because of running my business. So at least from my business, I am able to recover whatever the amount I am sacrificing towards the rent. That's the reason these kind of notional expenses should be recorded under cost accounting but not under financial accounting point of view. Another point, sir. Interest on capital. Sir, interest on capital we will record under financial accounts at notional. Here, through they are not incurred. If they are incurred, definitely you will record under financial. Even though they are not incurred, interest on capital, I have took this particular amount from him. I need to pay this particular amount of it. I am not paying right now. But in case if I take, I need to pay this particular amount. This is also a notional expenses only recorded under cost accounting but not under financial accounting itself. Same way, salary to proprietor. Yes sir, salary to proprietor. It is also a notional figure. You don't pay any amount to him as a salary because he is the owner, he will enjoy everything. But he is sacrificing in case if he is working somewhere, he will get some amount. So that is what we are showing in the name of notional. Actually you are not paying but still you are recording it. But financial accounting never record this kind of notional things. Even notional depreciation. So depreciation we will record in financial books. I am saying sir, already depreciation is fully charged. The book value of the concerned asset is nil, but still you are showing depreciation in the books of accounts. This is also a notional depreciation. This is also will shown in costing point of view. Sir, if you observe, these are all expenses only. Where only we are recording, sir? Costing. We are not recording financial. Then automatically what will happen? Costing profits are less than the financial profit. Then if you want to equal with the financial profit, what you are supposed to do? You need to add. Why? Your costing profit is decreases when compared to financial profit, because these are all notional expenses. Only we are recording under costing point of view but not under financial point of view. Automatically costing profit is showing less when compared to your financial profit. If you want to equal both the things, what you are supposed to do? Add. That's it. Next one, differences in methods of depreciation point of view. So because when it comes to depreciation, if you want to check, so the third point is regarding depreciation in method point of view differences. Sir, the depreciation may be different in two set of books of accounts, because under financial books you may be adopted one kind of depreciation or one method of depreciation. When it comes to costing books, you may be adopted for one method of depreciation. So let us take an example. Here straight line method we will love to implement under costing books point of view. When it comes to financial books point of view, the best method to charge depreciation is WDV or diminishing balance method. That's the reason you are getting two different, what you are getting? You are getting two differences in related to your depreciation point of view. When it comes to two depreciations methods you are applying, automatically you will get differences in depreciation amount. Because of these methods of differences only you are getting differences or not, you will find out the things. So automatically whenever you are following a straight line method of depreciation, that straight line method of depreciation is automatically more, that means you will charge more when it comes to WDV method point of view. That is the reason the depreciation amount showing under costing books is more than the financial books. Whenever you are showing more expenses in costing point of view, automatically costing profit is less when compared to your financial profit. If you get the concerned things, what you are supposed to do, you need to add back the difference amount of depreciation for if you are starting with your costing profit point of view. One more time I am repeating, sir. So you are showing depreciation under SLM method under costing books, WDV method under financial books. Different methods you may be adopted. That kind of situation, the amount of depreciation you are charging under costing books is more than the financial books itself. Then automatically whenever you are showing more expenses in costing books, automatically costing profit is less than the financial profit. If you want to equal with the financial profit, that should be add back itself. Same way, treatment wise also you have differences. Like the objective of cost accounting is what? If you remember, you want to provide information to the management from time to time. If you want to do controlling the cost, if you want to take the decision making from time to time basis itself. Like for example, last in first out method point of view, the inventory valuation was not recommended by the accounting standards. If you remember, if you are aware of accounting standards, accounting standards doesn't recommend the valuation of inventory under last in first out point of view, whenever if they want to do financial reporting purposes. But when it comes to cost accounting definitely the valuation of inventory point of view, they will adopt last in first out method itself. So similarly, cost accounting may use different methods of depreciation. What is allowed under financial accounting point of view. Then this is the reason you maybe go with financial accounting production unit method, depletion method when it comes to some another intangible point of view. You sum of digits method. You have different methods of depreciation when it comes to financial accounting. Those are all not applied under cost accounting. We maybe go with majority of the situation SLM method. One more time I am repeating this point, sir. When it comes to the last in first out method should not be allowed for inventory valuation because it is not recommended under accounting standards. Whenever if you are doing your financial reporting process, the same method should be allowed under cost accounting. So last in first out method was not allowed under financial books because accounting standards are not recommending that method for the financial reporting process point of view. But the same last in first out method is recommended under costing books point of view regarding the valuation of inventory. Different set of methods under different set of books. This is also another reason for the differences. Next one, when it comes to last part, valuation. Financial accounts point of view, stock should be valued cost or net realizable value, whichever is lower basis, we will do valuation of our inventory stock. But when it comes to, this is under financial books. When it comes to costing books, stock always should be valued at cost basis only. Only valued at cost basis. Now tell me, if your cost is more than your NRV value, then automatically stock valuation should be more. Like stock means which stocks? Opening stock as well as closing stock. Suppose your closing stock valuation is more under costing books than financial books, automatically costing profit is more than the financial profit. Automatically both profits are not equal. So if you want to equal the concerned thing, what you need to do? Subtract the amount itself whenever you are starting with costing profit itself. This is what the things you need to remember whenever you want to do reconciliation statements itself. So first point one more time. Certain nature of items are only included under financial accounting, like purely financial nature of expenses, income tax, bad debts, goodwill write-off, interest payments, these kind of things. When it comes to purely financial incomes like dividend received, rent receivable, interest received on bank deposits, Yes, these kind of purely financial nature of items of income recorded only under financial books but not under costing books leads to costing profit is more if you including only income in finance, only expenses included under financial accounting leads to your financial profit is less than your costing profit. Second, certain items, notional expenses like interest on capital raised but not paid, actually paying rent for our own premises. Actually, you are not paying any rent, but you are showing salary to the proprietor. Actually, you are not paying any amount of salary. On the basis of opportunity, we are recording these things and charging depreciation whenever actually the book was scrapped, the book value written down to zero, but still you are showing depreciation. So these kind of things happen with cost accounting, but not under financial account. Simply notional expenses never recorded under financial books. That's the reason costing profit is less than the financial profit. That is the another reason why we wanted to encourage reconciliation statements. Third, differences in the methods of depreciation as well as certain valuation aspects. Example, certain methods only recommended by your financial accounting but not under cost accounting whenever you want to charge depreciation. Same way, inventory valuation, last in first out method was especially not recommended by accounting standards whenever they are doing their financial reporting process. Same way, that method has been allowed by cost accounting system itself. And finally, inventory valuation, whether it is opening stock or closing stock. But when it comes to financial books, cost or NRV, whichever is lower basis, we will do our valuation of inventories. But when it comes to cost accounting books, only at cost basis we will do the recording. That's the reason. Yeah. Where reconciliation statements can be avoided? When cost and financial accounts are integrated. Already starting I told you, whenever you have only one set of books of account, there is no concept of differences in profit, then there is no separate concept of to prepare your reconciliation statement between two set of books of account. What is meant by integration means one set of books of accounts requirements of both. Only same set of accounts fulfill the requirement of both the cost and financial. Not two separate set of books of accounts, only one set of book of account maintained. Whenever you are maintaining only one set of books of account, only one profit, so automatically there is no concept of preparing reconciliation statements itself. So what is the reason for inclusion of notional rent of a factory building in cost accounts? So many people will get the things, why the reason, why not in finance, why only in costing. For this purpose only I included this point also as well. Now factory building may be received rent owned by entrepreneur. When if it is rented, rent is paid to the owner and the amount is included in the cost itself. When the factory building is owned, no rent is payable, and for comparison of cost of items made in the rented factory building and if it is owned in a factory building. So a notional rent is raised in the books for comparison of cost in both the cases itself. However, it should be remembered that when the building is owned, the cost is charged as depreciation of the building itself. So, building is owned, the cost is charged as a depreciation of the building name we will charge. See one more time. If you have a rented or owned by the entrepreneur, the rent is paid to the owner and the amount is included in the stock cost. When the factory building is owned, no rent is payable, and for comparison of cost of items made in the rented factory building and in owned factory building, a notional rent concept should be raised. If you want to compare, in case if I rented, in case if I owned, if you want to compare both the things, the comparison purpose, definitely notional rent should be raised whenever if you have a owned factory building itself. Books for the comparison of costs, however, it should be remember that the building is owned, the cost should be charged in the name of depreciation on the building, not in the name of rent. What it said? That's the reason for inclusion of notional rent in the factory building. Yama, this is about the theoretical part. Finally, what is the procedure for reconciliation point? There are 3 steps involved in the procedure for reconciliation point of view. First, ascertainment of profit as per financial account. First you are supposed to do. Second, ascertainment of profit as per cost accounts you are supposed to do. And finally, reconciliation under both the profit should be done. This is what we will perform, the 3 steps wherever if you want to do reconciliation statements itself. Let's move to the problem. Whatever the points theoretically we discussed, now you can check whether we are approaching in the same manner or not. This is December 2024 attempt CMA Inter under costing examination question. Same was there in CA Inter study material question as well as, if I am not wrong, illustration number 8 from study material itself. That's why I choose this question. It will help for understanding for both CMA people and CA people as well as. See sir, start with the question reading. So the following figures have been extracted from the final accounts of manufacturing firm for the first year of operation. How much material consumed, how much direct wages, factory overheads, how much, general administrative overheads, how much, which words they are using, general administrative overheads, selling and distribution overheads, bad debts, preliminary expenses write-off, legal charges, dividend received, interest received on deposits, sales how many units, closing stock of finished goods, amount is given, working progress also given. This is all information basis first year operation extracted from the final accounts of a manufacturing company. By using these figures, first we will prepare our profit under financial records point of view. So put the heading profit and loss account. This is what sir, as per financial books or as per financial records. So many people, they are wasting their time whenever they are drafting the formats. Format means here particulars amount, not the boxes. So write out to material consumed. $50 lakhs are given in the question. Next one, to direct wages. How much amount? 30 lakhs. Next, to factory overheads. How much? 16 lakhs. Next, sales. How many units? 1,20,000 units. Amount given 1 crore 20 lakhs. Next sir, by closing stock. Under that you have finished goods as well as working progress. Finished goods are 3,20,000. Yes sir. Yeah. And working progress 2,40,000 given in the question. Yes sir, then you are in a position to find out to gross profit. This is the balancing figure. If you check with the totals, this was 1 crore 25 lakh 60,000. This is 1 crore 25 lakh 60,000. It's 80, 96, 96 4. So you are getting 29 lakh 60,000 is your gross profit amount. So by gross profit 29 lakh 60,000. And if you check with the question, you have incomes, dividend received, interest received. Should be credited to your profit and loss account credit side as a name of incomes. By dividend received, how much? 1 lakh, as well as by interest received. How much ma? 20,000. Now it's very easy to prepare profit and loss account itself, because you're all aware of how to prepare P&L account. That's the reason it was so easy to prepare the things. In addition to that, you have some expenses with us. What is that? 2 general administrative overheads. 2 general administrative overheads given 7 lakhs. Yes sir. Next, 2 selling and distribution overheads given 9,60,000. Next, 2 bad debts, it was there 80,000, and 2 preliminary expenses write-off was given in the question. How much Nana? 40,000, and 2 legal charges, how much? 10,000 itself. Yeah, this is only data. Yeah, I took general, selling, bad debts, preliminary expenses, legal. So now we are in a position to find out the net profit or loss. So we are getting total of how much? 29, 30 lakh 80,000. Correct? Yeah. $30 lakh 80,000 minus 7, 16, 17, 1790, 1790. Then you are getting 12 lakh 90,000 will be your net profit. To net profit balancing figure. Now what to do? We need to find out profit under costing books point. Let's see the information. The cost account for the same period revealed that direct material consumption was 56 lakhs. Sir, normally costing point of view and finance point of view, if they are not giving any information, means you need to assume both the expenses are same regarding material wages point of view. There is no information regarding wages. That means what we are assuming, how much amount you will show under finance point of view, the same amount should be recorded under costing point of view. Factory overheads, how much they want to recover? 20% on prime cost. Administrative overheads recovered how much? 6 per unit of goods sold. Selling and distribution overheads recovered how much? 8 per unit sold. Prepare the profit and loss account for both the financial records as per costing records, and prepare the reconciliation statement as well as. So, if you understand the question, we didn't find out how many units of production. Sir, how to find out cost of goods? Normally, units sold equal to opening stock of finished goods plus production minus closing stock of finished goods. This is what unit sold point of. So now if you want production, then what to do, Nana? Production equal to sold units plus closing stock of finished goods minus opening stock of finished goods. That is equal to how much, sir? Your opening part, that is nothing there. Sold part given 1,20,000 units. Closing, if you check with the question, 4,000 given. Opening was 0. Totally how many units you produced on a 1,24,000 units you produced. Got it? See once the question. See ma, this is the sales unit. This is the finished goods units. There is no information regarding opening. That's the reason we took 0. Finally, we arrive at 1,24,000 units produced. Sir, why this concept? Because we need to find out the cost of production. Based on that, our closing stock of finished goods should be valued. Because important point, remember, closing stock of finished goods should be valued based on cost of production per unit basis. How to find out cost of production per unit equal to total cost of production divided by number of units produced. That's the reason we computed this part. Got it, sir? Now we are ready to do our computations under costing point of view. Yeah. So put the heading. Statement of cost and profit. This is as per costing books itself. Particulars amount. Yeah, let's start. Starting with if you check with direct material was specifically given in the question under manufacturing point of view, that is about 56 lakhs given in the question. If no information was provided, means costing, whatever the information we recorded under financial book should be recorded under costing books point of view as well as. Then direct wages 30 lakhs. No direct expenses. After adding this, we are getting prime cost. Okay. Then add factory overheads. How much they said, sir? 20% on prime cost. So that is equal to 17,20,000 itself. But do you have any quality control? Yeah, these are all expenses are there, nothing, sir. That's the reason. That itself will be the gross factory cost. Gross factory cost. How much more? 1 crore 3 lakhs 20,000 itself. And if you check with in the given question, they provided closing working progress amount. No information regarding that. That's the reason we will take how much amount recorded under finance. Same amount supposed to be recorded. Then you will get, normally this is net factory cost as well as cost of production as well as. Yeah. Even you can, that is about cost of production. That is nothing but you are getting 1 crore 80,000 itself. Okay. Now when it comes to CMA people, be conscious. Under CA, the approach of administrative overheads is different. But when it comes to CMA people, the approach is little different. Just wait. From here onwards, how to do the computation, I will tell you, draft you once again. Please wait. Please wait. Yeah, how to find out the profit, I will find out. Please wait. Here administrative overheads, they mentioned what, sir? That is general administrative overheads. Here see, administrative overheads record 6 per units of goods sold basis. So CA point of view, the approach is little different. Here the approach is little different. Just wait, sir, CMA people. Don't be confused. Until this, the concept is same. From here onwards, little change. Please wait. Once if I finish under CA point of view, I will convey about CMA point of view as well as. So now, less closing stock of finished goods. And already I told you, closing stock of finished goods should be valued based on cost of production per unit. So your total cost of production was 1,80,000. You totally produced 1,24,000. Here you have working notes reference also. Then you are getting how much, ma'am? 3,25,160 rupees. Deduct it. Then you will get cost of goods sold. How much, sir? 97 lakh 54,840. For this, add administrative overheads in bracket general. This is equal to 1,20,000 into 6 rupees. 6, yes, sir. So 7,20,000. Same way, add selling and distribution overheads. How much, sir? 1,20,000 into 8 rupees. That is equal to 9,60,000 itself. Then after this, we are getting total cost or cost of sales. Add the particular things. You are getting 1,14,34,840. And already sales given. Just leave one line gap. Write down 1,20 lakhs is the sales part. Then add profit. That should be your balancing figure. 5,65,160 rupees. This is profit under CA people point of view. Now come to CMA people point of view. I'm starting from net factory cost. How much we got? 1,80,000. For this, add administrative overheads 7,20,000. Then you will get cost of production 1,08 lakhs. Correct, sir? 1,08 lakhs. Less closing stock of finished goods. Now this valuation only for CMA people, CA point of view we already done, because the approaches of cost sheet under CA and CMA was different. That's the reason we are getting the differences itself. So here see the valuation 1,08 lakhs divided by 1,24,000 into 4,000. See, sir, little we'll do the computation. One crore 8 lakhs divided by 1,24,000. We are getting 87.0967 is the cost production per unit into 4,000 units. We are getting 3,48,387 itself. 3,48,387 itself. That is the difference between the closing stock under CA people and CMA people. CMA people point of view, administration should not be form part of cost of production, because that is general administrative overheads itself. Yeah. because already in the given question they provided administrative overheads are general, and even if you check with the question, administrative recovered at unit sold basis, that's the reason that should not be form part of your cost of production. So that's the difference you can see. That's why how much you got under finance point, sorry, CA people point of view, what is your closing stock of finished goods valuation? 3,25,160. But the same thing if you compare with CMA point of view, you are getting 3,48,387 itself. Now 1 crore 88 lakhs minus 3,48,387. We are getting Nana. This is our cost of goods sold information. 1 crore 4,51,613 itself. For this, add selling and distribution overheads 9,60,000. Add 9,60,000. Then you are getting 1 crore 14 lakh 11,613. That is the total cost or cost of sales under CMA people point of view. Just write down mass sales, that is 1 crore 20 lakhs minus 1 crore, we are getting 5,88,387. This is our profit balancing figure for CMA. Sir, why we got more profit CMA point of view? Here if you check with the closing stock valuation under, here it was more. That's the reason we are getting more amount of profit when compared to this. Here your cost of production point of view, what is not included, administrative overheads are not included. That is the reason your cost of production was increased by 7,20,000, leads to your closing stock valuation increases. That may be change your impact of profit part itself. Got it, ma? Now we'll do reconciliation. Sir, don't worry. I will prepare the reconciliation statement both for CA point of view as well as CMA point of view. First we'll do reconciliation for CA people point of view. We are doing reconciliation. So particulars, amount. So already I told you, always I love to choose from costing point of view profit itself. So costing books basis profit as per CA point of view, we are getting 5,65,160 is the amount. Here, yes. Now add or less part. All add items at one place and all less items should be maintained at one place. Easy to compute. Now check with the point by point. First start with raw material consumed. How much we are showing in finance? 50 lakhs. How much we are showing in costing point of view? 56 lakhs. How much extra amount you are showing? 6 lakhs. Where, sir? Costing point of view. So costing 6 lakhs amount showing more, automatically costing profit was less when compared to financial profit. To get the correct profit, what we are supposed to do? Add excess amount of material consumed. How much, Nana? 6 lakhs. Direct wages 30 lakhs, no change between both the things, same amount we recorded. Next, sir, come for next expenses. Factory overheads, here 16 lakhs, under costing point of view, how much much? 17,20,000. So 1,20,000 expenses we are showing in costing books point of view more. Whenever you are showing 1,20,000 expenses more, costing profit was less when compared to financial profit. If you want to equal with financial profit, what you are supposed to do? Add. So add over recovery of factory overheads 1,20,000. Examination, write down 56 lakhs minus 50 lakhs, 17.2 lakhs minus 16 lakhs. How you got the differences also? Sir, what about administrative overheads? Administrative overheads, how much we are showing under finance, Nana? 7 lakhs. What about under costing point of view? We are showing 7 lakh 20,000. So 20,000 rupees of administrative overheads you are showing more where costing. So costing profit decreases. If you want to equal with the finance profit, what you are supposed to do? Add. So add over recovery of administrative overheads. 7.2 lakhs minus 7 lakh, that is equal to 20,000. Next, sir, selling and distribution overheads 9 lakh 60. Costing point of view also we are showing 9 lakh 60 because 1 lakh 20 into 8 you are getting 9 lakh 60. Both finance and costing point of view are showing the same amount of profit, not an issue. Next, sir, like these expenses, bad debts, preliminary expenses, write-off, legal charges. 3 are financial nature of expenses. Where only we are recording finance, where not recording costing point of view. So purely financial nature of expenses leads to finance profit is less than the costing profit. Correct, sir? Sir, how? Expenses not recorded in costing books leads to costing profit showing more when compared to finance profit. If you want to equal both the profits, what we are supposed to do? Deduct these 3 items from costing profit point, because this much amount of profit was more in costing when compared to financial. That's the reason we are supposed to deduct these 3 items. What are the 3 items, ma'am? First one was bad debts. How much, sir, amount? 80,000. Then what about preliminary expenses write-off? How much, sir? 40,000. Same way, third expenses, sir, legal charges. These 3 are purely financial nature of expenses, not recorded in the costing books. That's the reason costing profit is showing more than the financial profit. That's the reason we are deducting. Good, sir, fine. Then anything, sir? Yes, don't be hurry. We have 2 more points. Dividend received, interest received. So these 2 are incomes. Where only recording finance, where not recording costing. So income recorded only in financial books but not under costing books. So what will happen? Costing profit is showing less when compared to financial profit, sir. If you want to equal both the things, what we are supposed to do? Add. That's the reason, ma. Add interest received. How much, sir, amount? 20,000, as well as dividend received also. How much? 1 lakh. Total amount should be added 1, 6, 7, 8, 9, 8 lakh 60,000 we are supposed to add. Then we are getting 14 lakh 25,160. Then we are supposed to deduct 1 lakh 30,000 itself. Then how much we are getting now? 12 lakh 90,160 itself. Yeah, no, wait sir, 1 minute. One more point was there. What is that? Closing stock. Closing stock. Closing stock. Yes sir. Why? How much showing in costing books? 3,25,160. How much in finance point of view we are showing? 3,20,000 only. Here how much? 3,25,160. Tell me, sir. Closing stock you are showing more means profit will increase, sir. How? Just remember the trading account, sir. Closing stock, one side you are showing 3,20,000. Another side in costing books you are showing 3,25,160. 5,160 rupees of closing stock you are showing more in where, sir? Costing point of closing stock valuation more in costing books leads to costing profit increases by how much? 5,160. To get the right profit, what you are supposed to do? Deduct. What is the point, ma'am? Closing stock over valuation where costing books point. 3,25,160 minus 3,20,000 then 5,160 rupees. Now 1,35,160 we are supposed to deduct. Then we are getting 12,90,000. What is this, ma? Profit as per financial books. This is as per CA students' point of view. When it comes to CMA people point of view, sir, focus. Save reconciliation for CMA people point of view. Particulars. Amount, have less space. Profit as per costing books. We are getting how much the costing profit? 5,88,387. So add. Now same, sir, whatever the items we presented here, treatment is same. This is the only part was changed because of closing stock valuation. That too happened because of cost of production variation. Because administrative overheads are form part of cost of production for CMA cost sheet point of view. That's the reason you got different amount of cost of production. That's the reason you got different amount of closing stock of valuation. That's the reason profit was increased when compared to CA point of view, CMA. So this treatment will be same, sir. The treatment point of view, no change. All the concern items should be adjusted same manner. So material cost showing more in costing profit. So that should be added to costing. Same way you are showing 1,20,000 factory overheads more in under in related to costing books. That's the reason costing profit decreases. To get the right amount of profit, that should be add back. Same way administrative overheads 7,20,000 only you are showing, whether it is a CMA or CA. So 20,000 you are showing more in related to costing. That's the reason costing profit decreased by 20,000. So you need to add back. Same way interest received, dividend received are purely financial incomes, where not regarding costing. So costing profit decreases. To get the right profit, both the things should be added. That's the reason straight away I am taking this particular amount here. What is that, sir? Add amount 8,60,000 amount should be added. Same way less items. These three will be common, sir. What is that? Bad debts 80,000. Same way preliminary expenses write off 40,000. Legal charges 10,000 common. Where difference will come? Closing stock over valuation. Sir, how much? 3 lakh. How much, sir? Closing stock we got 3,48,387. How much showing? 3,48,387 we are showing. But in finance point of view, 3,20,000 only you are showing. Totally 28,387 rupees I am showing more. Where costing point of view. If you check with the totals, 1,58,387 should be deducted. See, sir, how much will get? 5,88,387 plus 8,60,000 minus 1,58,387. Finally, you are getting 12,90,000. This is profit as per financial books. Yama, this is the way we are supposed to solve our problem. So many people here doubt, sir, almost all we discussed more than 1 hour, sir. Even of course some point we spend it for theory and calculation, because I done both under CA and CMA point of view, because the concept was little differentiated. That's the reason we took much time. But believe me, if you are very good at competitions, and if you know how to prepare the cost sheet and the P&L account, it doesn't take more than 16 to 18 minutes itself. Trust my friends. And this is the way we are supposed to solve our reconciliation statements. I hope so. You enjoyed the session. You got the clarity. And one more time I am communicating regarding CA and CMA point of view. Closing stock valuation difference was happened because cost of production. Why difference happened for cost of production point of view? Administrative overheads are form part of cost of production under CMA. That not general administrative overheads are not form part of cost of production under CA. That's the reason cost of production changed under both the CA and CMA point. Whenever your cost of production changes, closing stock valuation will differ. Whenever closing stock value differ, automatically profit point of view differences will come. I hope so. You enjoy the session, and please like the concerned video once you watched. Please, if possible, try to share with your friends. Once again, why these many times I am asking you, please like the video. It may be reached to so many people will learn more conceptual subject. That is the only intention. So your support is very much immense happiness for us. That's the reason I am expecting from you more supporting. If you support us like this, more conceptual videos I will come for both CA and CMA point of view as well as. Thank you, sir. Bye and have a nice day itself.